this week, RIL's Q1 earnings seems to beat market expectations, but we'll take a closer look and tell you if it's time to start buying up the stock. Maruti Suzuki sees another bout of labor riots and violence at its Manesar plant. Find out if you should be holding on to the stock. And Gaurav Shah takes Glaxo Pharmaceuticals as a smart investment option. We'll tell you why. You're watching all about stocks with ET now. Thank you for joining us. Remember, this is a show for long-term retail investors who need help with their stock investments. We've had quite a week, both politically and at the market. We've had results come in, Reliance came in at the end of the week, and of course we saw a lot of political development happen in Delhi as well. Over the next half hour, we'll bring in all of that news and we'll tell you how it affects your stocks and what you should be doing with your stocks portfolio. There's an email ID at the bottom of your screen where you can write to us and send us any questions you might have about the markets. And of course, you can reach us on our Facebook page. Before we go any further, my colleague Ajay is here with the latest numbers of the market. Ajay.
Well, it was a sluggish week for the Indian markets in the face of all these expectations of reforms once the presidential election results are out, and also the diesel price hike. So you could see it in the benchmark indices, which were down about 0.5% for the week gone by. But there were, good moves coming in on the specific stocks. Look at Bajaj Auto, Ken India, Bharti Airtel, all of them gaining 3 to 6% each for the week gone by. On the losing side, a good mix of banking. Kotak Bank gave up close to 7%. The week results also played its part on that. Tata Motors 5.5%. Lower JLR numbers for the last month also weighed on that particular name. Reliance Infra gave up close to 4%, and the other Anil Ambani Group stocks also traded weak. If you look at some of the mid-cap side of the market, you would see almost a flat week for the mid-cap index, down just 1%. Again, individual names are indicating Motilal Oswal was down close to 10% this week. Some of the consumer names rose very smartly. Trent, if you look at TTK Prestige, a trader favorite, 7 to 8% gains coming in on this one. So all in all, it was a very mixed kind of week for the Indian markets. Individual movers were there, but the benchmark indices were quite sluggish.
And then, of course, you're a man who tracks RIL. When we went into Friday, the market was very pessimistic of what it might see from RIL in those earnings. The earnings came out after the market shut for the week. Take us through the numbers.
Well, Reliance Industries definitely surprised on the upside as far as the first quarter numbers are concerned. So bottom line, top line, both much ahead of what the street was actually estimating. Analysts expect that Monday morning the stock may actually give an upside of about 2% purely based on the numbers. So refining side of the business did well, good gross refining margins. The gas side of the business did well on the margins. It was the petchem side of the business which was, some bit of a drag. But of course, because of good contribution from the treasury side of the business, other income, rupee remaining weak versus the dollar for the quarter gone by, export revenues remained strong. There was good help coming in from these two elements. But analysts believe that the operational, matrix of the company remains very strong after the first quarter numbers are out, and the stock may actually find a floor at 700 rupees a share, which is the average of where the company has been buying back shares also from the open market. And they believe that the stock may actually trade with positive bias in the next few weeks.
Right, Ajay. Thank you so much for those details. Joining us now to help us understand RIL's earnings a little better is Jagannadham Thunuguntla, the Head of Research at SMC Global. Jagannadham, thank you so much for spending time with us. I want to start off by asking you, on first look, it does seem like RIL beat market expectations. We saw, of course, those gross refining margins were actually better than they were the last time, so it seemed impressive. But when you take a closer look at the earnings, when you take a closer look at gas production, it seems to be a mixed message there. Could you take us through what this actually means for the stock?
Yeah, GRMs is a clear positive, no question about that. I think they got about $7.6, while the market was expecting about 7.1 and 7.2. And Singapore GRMs were about 6.6, meaning there was $1 full of premium. I think it happened after good 3 quarters. That's definitely a positive. And secondly, the petchem margins is a disappointment, gas production is a disappointment, and other income also came less than the last quarter's results. So overall, it's just the refining margins has bailed out the company this time around, and also the rupee weakness has helped them in terms of the export revenues. All in all, it's okay quarter. I think there should be a small pop, let's say 2% kind of jump on Monday morning, nothing beyond.
Of course, there's a view that higher production from the KG basin will improve that margin in the time to come, but we don't have clarity yet. When do you expect to have clarity on that?
No, I think the company is working on the technical problems with BP, but there is no clear indication. The gas production is going with each passing day, and moreover, there is a reports going around that the CAG is trying to set the financials, and moreover, the company has asked that the government has to allow the gas production. Otherwise, by 2015, 2016, the KG-D6 may get shut down. Is not definitely a good news, because the company has spent more than $6-7 billion on the KG-D6. If something goes wrong there, it means it can be a complete write-off. It can be a very big risk.
Right, so you've been of this opinion that Reliance is a range-bound stock and it should be a swing investment for a retail investor who's holding that stock already. What would you recommend they do?
So if they are holding, I'm sure they must be holding at very high levels, because the stock has been continuously falling. Many thereby the purchase point of many of the retailers is very high. They are left with no choice. They have to just hope that the KG-D6 gas rampage will happen and come back to the same levels, because many Reliance shareholders are sitting on about 50% fall. So meaning thereby, so it's only KG-D6 that can make the change in the whole scheme of things. Otherwise, the stock may not have much to take any rally.
We have a couple of questions from viewers as well. Shashidhar has written in, bought Reliance Industries at 11.85. Wants to know if there's any possible way he might recover that amount. What's your recommendation?
So he was forced to become a long-term investor, and he has to become that. I think maybe if he has money and if he is willing betting upon Reliance and Ambani surname, then probably around 650, 700 he can try to average the stock. But to get that 1180, I think he will see at least 3-4 years rolling by before he does much without much action.
Alright, so average out Reliance. We have another question from Poonam, who wants to buy shares of Tata Motors at this level. Tata Motors ended the week at 233. She wants to know if it's a good idea.
Around 200-220 level, it's a good buy, because the stock is showing momentum and the Jaguar Land Rover is continuously surprising on the positive side. I think around 200-220 it makes sense. I think of all the automobile stocks today, I think Tata Motors appearing to be a good bet.
Right, and while we're on that auto sector, I want to ask you about a couple of stocks that moved heavily during the week. We saw Maruti, some disturbing news coming in from the Manesar plant. They haven't reached some sort of agreement yet. There was some violence as well. Very high volumes on Thursday when the market was dumping that stock. What's your call on Maruti?
The stock will go below 1,000 rupees for sure. And moreover, not only now, I think even in the future, for a few quarters, maybe 3-4 quarters at least, any analyst would like to give something called labor discount. That means he will do the valuation in a normal course and then do a labor discount, because it has been more than 1 year. Now the market has been struggling with labor. That means it's not just a 1 day, 1-2 days affair. It's a long-drawn systemic issue. I think going forward, the company has to face the music again and again. Meaning thereby, whatever valuation they would have got otherwise, and they have to subject it to the labor discount. Otherwise, I think in that sense, despite the fact that Maruti is the largest automobile company in terms of the sales in India, but I don't think they will get that kind of encouraging valuation in India.
The other interesting information we received was, of course, from SAIL, this investment now approved from the government for SAIL. Now, I know that you've always considered SAIL a very good idea for retail investors. Is this something that retail investors should be excited about?
It is exciting for the retail investors, no question about that. It's 90 rupees ongoing price, and it's a reasonable discount of, let's say, 10 rupees by the government. So meaning thereby around 80 rupees if it comes, I think it can be an excellent price. But point is, it's little surprising why the government has chosen SAIL at this point of time. Because if 1 year back, the stock was trading around 190 rupees, meaning thereby they would have got double the amount the current is. Because if they come out with the issue today, they will get about 4,000 crores. Had they done it last year, they would have got 8,000 crores. But nevertheless, from the investor's point of view, it's excellent price to go and buy.
If the issue is coming now after SAIL has corrected so severely, is that message from the government then that they don't expect the stock to go up much further in the next 1 year or so?
Not really. I think the government is more than anything else. It's more of a desperation, because the government is not finding any rhythm and a pattern in terms of the divestment. They are going through ad hoc patterns. I think they don't have a systemic homework or a roadmap to achieve the target of 30,000 crores. That's what they are doing in bits and pieces. I think it's not a case of government is saying that the stock price won't go up. It's more a case of government is saying that they don't have a plan ready to go about this divestment program.
Alright, Jagannadham, it's always a pleasure to have you on All About Stocks. On the other side of a very quick break, we'll have Gaurang Shah join us and give us his stock pick of the week. Glaxo Pharmaceuticals will talk about why you should be investing in it now. Don't go anywhere.